Oil's up, that means gas is up. Food is up, commodities and materials are up. Interest rates may continue to go up, and housing prices may continue to stay up. But buying real estate is quite possibly the single best hedge against inflation. You know what's not up? Apparently Arizona drinks. Now, I had heard they've been the same inflation-resistant price for the last 30 years. Is that crazy? For the past 30 years, Arizona drinks have been just 99 cents. Now, 30 years ago was probably about the last time I had one. I wonder if the makers of Arizona drinks sponsored that article that I read about inflation. It did make me buy one, however. Here's another thing that's up. Home prices. Yes, again. Annual home price appreciation in the Denver metro area topped 23% for the second month in a row in April, and barely missed matching a record high set in March. Now, the April gains came before the mortgage rates on a 30-year mortgage started spiking towards 6%. The peaking pattern seen in Colorado, which was also seen in the national index, reported a 20.6% gain in March and a 20.4% gain in April. Then rates went up, and appreciation decelerated. Now, according to Selma Hepp, the deputy chief economist with CoreLogic, it was the slowing of the monthly gains, which were up by 2.1% nationally, that suggested further deceleration ahead. Signs of a tipping point towards greater balance between buyers and sellers are increasing, albeit only compared to some of the most competitive conditions since the early 2000s. New inventory could actually be the headline for this month. We saw the 5th consecutive month of increases of new listings of homes for sale. Buyers have been asking for it, and sellers finally brought it by bringing new inventory to the market to take advantage of high home prices. Compared to last May, 11% more new homes came on the market. Pending sales rose slightly nationally, marking the first time in 6 months that sales increased. The number of listings that moved to pending status in May was 5% lower than last May, but remember, 2021 was defined as an unprecedented year in real estate gains. We did see a seasonal month-over-month uptick in buyer activity as contracts were put in place on 10% more listings than the previous month. Now, compared to May of 2021, the number of listings that closed in the Denver metro area was just 2% lower, but seasonally we saw a month-over-month increase of 10%. Historically speaking, May and June have always been the best months for home price appreciation and sales volume. Ultimately, gross sales volume was up 17% compared to May of 2021. Listings across all price ranges continued to take a median of 4 days to move from active in the MLS to pending, and that's with a contract for purchase in place. Now, this metric has been steady for more than a year now, but as I report this information, that number has finally started to increase with rising interest rates and increased inventory. Interestingly, the market for homes priced above $1 million is strong and growing stronger. When comparing this May to May of last year, the number of new listings priced above $1 million was 67% higher, and there were about 51% more closings. Much of that, no doubt, is a result of increased home values in general. May did bring a slight softening in home prices. The median closed price of a Denver metro area home was $615,000 in May, which is 14% higher than last May, but 1% lower than last month. Historically, home values do not tend to slump until early summer, so this trend is a bit early, an indication that rising interest rates and intentional consequence from Fed action are finally starting to take their toll. So what if the rates continue to climb further? Well, I think it's important to recognize that in general, rates are going to rise for as long as inflation continues to rise. There are more and more signs of a recession. In fact, it's kind of become a self-fulfilling prophecy. The Fed is intentionally slowing the economy, and the result is pushing us into a recession territory. If you're considering buying a home this year, I recommend staying closely connected to and therefore highly informed about the interest rates as they fluctuate with variations in the economic news and indicators. The good news is we've got you covered. For the best, most up-to-date real-time information on mortgage rates, please consider checking out our video series, Mortgage Minute, where I discuss what's going on with rates and on a weekly basis with top producing mortgage loan officer Brian Daywald. I'm introducing a new category to cover this month as the volume of price reductions has become relevant again. As we evaluate market conditions, price reductions are a leading indicator of what may be happening in the market at a later time. In May, we really just began to see the beginning of the significant price reduction trend. Though throughout the month, we actually saw price reductions in the Denver metro area on 27.6% of the homes that went under contract. That number had been relatively negligible in the several months preceding May. I expect this trend will continue as we get deeper into the summer months. So what's the impact for home buyers? Well, in May, buyers were still paying a median of 4.2% above list price, which is down a mere 0.5% from April. Well, that number is changing now though, and is not a bad thing for home buyers. In this current market cycle, there are new opportunities to find homes easier than we've seen in years. Ultimately, rates go up and rates go down. Real estate markets are cyclical, and what's interesting is today's market conditions are the exact conditions that every buyer that I worked with over the past 2 years was clamoring for. While it's true that rising home prices and higher mortgage rates mean buying a house today costs more than it did even just a few months ago, you still have an opportunity to set yourself up for a long-term win. But you wouldn't know that by listening to the media. In inflationary times, you want to be invested in an asset that outperforms inflation and typically holds or grows in value. This graph shows how the average home price appreciation outperformed average inflation rate in most decades, going all the way back to the 70s, making home ownership a historically strong hedge against inflation. So what does that mean for you? Today, experts forecast home prices will only go up from here thanks to the ongoing imbalance of supply and demand. Once you buy a house, any home price appreciation that does occur will grow your equity and your net worth. And since homes are typically assets that grow in value, you have peace of mind that history shows your investment is a strong one. Now that means if you're ready and able, it makes sense to buy today before prices rise further. If you've been thinking about buying a home this year, it makes sense to act soon, yes, even with inflation rising. That way you can stabilize your monthly housing costs and invest in an asset that historically outperforms inflation. Now, as always, we understand that everyone's situation is unique. So now more than ever, who advises you actually matters. Please give us a call to discuss how this current real estate market impacts you. We would love to hear from you. Oh yeah, one last thing. If you felt like the information that you got here in this video was helpful or informational, please give it a like and hit that like button for us. See you next month.